Hello and welcome to Pro Trader Strategies market commentary for Thursday, February the 27th. My name's Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I talked about the economic data, geopolitical events, and how that overall is going to impact the market. Give you a little bit of an opinion on what I see going on. I do that in these daily market commentaries as well, but I cover it a little bit over with some option strategies that we can use to implement into our portfolio to increase our yield there. I think it's a better strategy to implement for different investors or traders because of the ability to use a little bit of leverage there. Anyway, without further ado, remember past performance in any trading system or methodology is not necessarily indicative of future results. All right, well, with that out of the way, let's get it on with the economic data. Let's talk about some of what's going on around the world here. First off with the economic data, and we've got Spanish flash CPI, Consumer Price Index, coming in at 0.8%, which was in line with expectations. We did have a couple of bond auctions and stuff like that overseas, but nothing really to look at there. But here in the United States, we got our core durable goods orders coming in at 0.9%, expected to be 0.2%. They did revise last month's number up. It was a negative reading of negative 0.1. It came out as a positive 0.1. Remember, durable goods strips out longer duration, usually things that are going to hang on to for longer than 3 years. And that's like in the form of transportation, you know, your refrigerator, things of that nature. So we take those out, and that number came out pretty good. Durable goods orders, including those longer duration goods that we might buy, came in at negative 0.2%. Well, that might seem pretty bad, but it was expected to be a negative 1.5%. And last month's number was revised up nicely from 2.4% to 2.9%. So getting some good economic data there. GDP numbers coming in line with expectations at 2.1%. And excuse me for that. Unemployment claims coming in at 219,000, a little bit higher than what we would like to see at 211. Pending home sales knocking it out of the park at 5.2%, expected to be 2.8%. Now remember, they haven't signed on, but we saw that people were buying homes earlier on with with home sales. What was it, yesterday? I think it was. And they revised last month's number up from a negative 4.9% to a negative 4.3%. So a really good number, despite the fact that we're in the winter months. Usually winter months, we don't see that good of home sales numbers. This is pending home sales. Keep in mind, we had the new home sales. That was a good number yesterday. And all of this is going to have to do with these lower interest rates we're seeing. People want to lock in. If you have a refinance right now, we are at the lowest levels we've ever seen in equity or in the bonds. So it is absolutely a good time to go out there and refinance if you or look for a home there, I guess. Also, we got natural gas storages coming in at a drawdown of 143 billion cubic feet, expected to be a drawdown of 158 billion cubic feet. So a little bit less than what was expected there. Also, let's talk about China. Now, China, really a driver of demand of crude oil. It is one of the biggest buyers of crude oil. That is causing some of this weakness. We're also seeing a coronavirus person that hadn't traveled anywhere, contracted it somehow in California. We also saw the people in New York that contracted it or were confirmed cases of coronavirus. Now, keep in mind, you guys, this virus is very contractable, for lack of a better term. It is more contractable than the common flu virus. Bottom line is, you guys, people, wash your hands, and if you feel sick, don't go to work. Call in sick if your kids are sick or whatever. Now, if you are elderly or you are, having health problems and stuff like that, you need, as soon as you start feeling sick, get medical attention, because that is who this is really affecting the most. The only people that have really been dying are the elderly and people with obesity or health risks, all right? So it's not like everybody is just falling over dead with this. There's only been 2,000 deaths due to coronavirus and 50,000 deaths here in the United States, somewhere between 30 and 50,000 deaths every single year due to the common cold. So you guys, this thing is really, I believe at this point, blown out of proportion. All right. There is the market needed to have a correction. You've heard me talking about it. This market move on that trajectory was just long overdue for a correction. I didn't necessarily expect a 10% correction, which is basically in the realm of what we were at today. So a little bit overdone. But what do we talk about in these webinars that I've been doing, these courses? 10% corrections are really where we need to be looking. And that's where we're starting to add to our portfolio. You get those pullbacks. I think this is overdone. There's a little bit of fear in the market, of course. Great opportunity to start adding to our portfolio, or my portfolio. I can't give you guys recommendations on what you guys should be doing with your portfolio. But at the end of the day, for me, selling puts to add to a portfolio right now is an unbelievable opportunity, considering I would say at least 75% of all of the stocks that I have on my watch list are at 100 IB%, and that is meaning that we are seeing the highest premiums we can get. So we're able to get strike location very far away from where the underlying is currently trading. So that is the opportunity to take advantage of. All right. Without further ado, let's get on with crude oil. You can see it's broken below $50 a barrel. Kind of talked about that. That has to do with a lot of this global demand, maybe possible slowing of the economy. Equities, or I should say bonds, and financial instruments like that are showing recessionary. People are talking the Fed needs to do an emergency cut. Listen, you guys, an emergency cut is not going to help supply chain issues, okay? That is more for when people are stopping spending, and we are not seeing that as of right now. So I think that they may very well cut interest rates just to calm the markets, but at the end of the day, it's really not going to do that much. All right, we've got gold moving higher today, but you would kind of expect with this kind of fear in the markets, we might see those all-time high, but it's really struggling to do that. So to me, we may have started to see some of this selling pressure in the equities start to ebb a little bit, and people are pulling some money out of that precious metal and putting it to work in the equities. Bonds, like I mentioned, moving to all-time historical lows in the bonds for the interest rates. So keep that in mind. Still, we moved up into the 30s today with the VIX. We did go up and test that again yesterday as the market really sold off towards the end of the day. It looked to me like, the market was going to kind of hold its own. But late in the day, a lot of people came in and did some selling. Again, today, coming into it, once we heard about the California person that contracted coronavirus, that really kind of put a little bit more pandemic into this whole thing, that it is going to come to the United States. It is, you guys. It's probably going to come here, probably die off in the summer. And by the next season, we are going to have antibodies and stuff like that, where you'll go and get a flu shot for coronavirus. All right. And, good reason to go out and get that flu shot, right? All right. So anyway, VIX, like we've talked about, has spiked, as we can see with the equities. They took a tumble again today. The Dow Jones Industrial Average was down over 800 points easily after the open. You can see we just slammed down there. But as soon as we started getting overextended here, people started to realize this is a buying opportunity. Once the market was down overall, 8 days ago, we were talking about all-time highs, and then we have a 10% correction. A little bit overdone from what I expected, but we do have a point of control here just above. This is where the time has been spent, not a lot of participation in putting your money where your mouth is. That is a little bit higher. So we might have seen some capitulation really happen here today, and that is the opportunity to start getting in, especially if this market ends up like where we are now, or a doji that looks like that. That would be a very good technical signal for me. We are below the 50-day moving average as we have been for the last couple of days. And as you can see, even the NASDAQ coming back after being down quite dramatically. As you can see, the low here, 85.20, which was another almost 200 points lower than we are right now. So market really coming back as I think people are looking for opportunities in here. And E-mini S&Ps, you can see as well, only down 36 points after being down quite dramatically again this morning. The low being 3,006, let's call it. And, you know, that was another 70 points lower than we were down. So the E-mini S&P is down 100 points, which you don't normally see. Here's a look at the overnight. As you can see, very bearishness. That California person came out last night, got a little bit of a bounce, but really bearish and made those lows during the day session, which is really important. Now we're starting to try and flush out those shorts as the market's starting to move a little bit higher here as the day goes on. Now, as long as the market continues this strength and people are finding opportunity there and believing this is capitulation, which I think it is, you know, that fear is just so overdone, I think. And we've had a correction that is needed. We've flushed out all the weak hands. This is an opportunity for me to go out there and look for some put selling opportunities, most likely, because if it goes much further, you know, I'll be happy to take that on. Now let's talk about Microsoft. Did come out today and say that they are going to have some distribution channels upset and supply chain issues that caused them to drop. I've been talking about, you know, the sell-off in Microsoft is really overdone. They don't have a lot of exposure to China. So in, you know, like Facebook, they're not going to have that exposure to China. And if everybody's at home, everybody's going to be Facebooking. So I probably should be looking at selling puts in Facebook here at these levels, which, you know, light bulb goes off. That's probably what I'm going to do as soon as I shut this down. So opportunities around to take advantage of, especially some stocks that are getting beat up that don't really have that exposure to the Chinese infrastructure and or population for that matter. You can see here United Airlines making a huge comeback after being like beaten up. That is something I am looking at for. I have some short calls in there. I don't think we're going to make it back up to the 85 calls, but we could see a very V-shaped recovery here in the market. So I'm going to be keeping an eye on that. Even Delta Airlines is positive. Disney got really beat up. Now Disney's one that is really something that has been a conundrum for me. Yes, they do have exposure to China with some of their park facilities. People, you know, coming up in this summer might not travel as much. We'll have to see. I am still long in Disney, but I am looking to sell some puts in there, and I'm looking to sell the 100 puts in there. As this market's been pushing back higher, you can see that it's getting away from me. I was trying to get a collection of 53 cents, actually 53 cents. Last I checked, I think it was trading around 50, but thought maybe I'd be able to get those. So I am looking to add things like that to my portfolio. And as soon as I get off here, I'll probably be looking to sell some Facebook. QQQs, maybe not looking like as much of a bottom here as the NASDAQ, but you can see market really starting to make a comeback even from the day session. We've had a wild ride today, so I don't expect that volatility to really come out. As you can see, we're still seeing volatility start to expand. Opportunities to collect premium. If you're bearish, I would be selling calls, and if you're bullish, then I would be selling puts. So that's how I'm going to be playing this. But today, of course, we're going to be talking about buying calls. Is there an opportunity out there to buy calls? What's the strike location we should be using to take advantage of a bullish assumption if we think there's a V-shaped recovery here? And I'll talk about what kind of underlines we can be looking at for that type of move. And pickings are thin, but we will find something for us to take a look at and move forward with the long call and a bullish market assumption. So check that out. Go to protraderstrategies.com. It's going to be talking about how we implement options into our portfolio to increase that yield overall. All right. And one last thing we got to do is go over the disclaimer. Please take a moment to read over this and make sure you are a big boy and girl and know that there is risk in the markets. Obviously, in the last couple of days, we've learned that. So make sure you go over this and remember past performance of any trading system or methodology is not necessarily indicative of future results. All right, take that.